Hey, what's up, amazing people? How's it going, traders? Welcome back to another episode of Forex Weekly Insight brought to you by Traders Advocate. My name is Best Man, the Kelsey Amaka. I'm your favorite Forex trader on YouTube, but more so, I'm one of the most realistic Forex trader that come out here bi-weekly basis, analyze the market, and give you guys trade opportunity that you can use ultimately to put money in your pocket, right? No hypothetical stuff, no gimmicks. What I do here is I document my trades, not just for you viewers online, but more so for my unborn children. All right, so they can actually see how they dad trade, the methodology behind my trade. And on today's episode, you will be learning how you can do a top-down analysis, the best entry and exit strategy, right? But more so, you'll be making money for the upcoming week. Guys, I'm so excited because what I do here on a weekly basis helps family. It helps a lot of persons who are struggling financially. But more so, you help people who have been duped, who have been cajoled, and who money has been taken from scammers who claimed to be forex traders, self-acclaimed forex gurus, who have scammed so many persons through the industry. You have to understand the forex industry is one of the most scandalous industry in the world right now. Because a lot of persons push what doesn't work or push what they don't practice or come out to show you replay mode. And what I do here is I come out here weekly basis, right? Analyze the market so you get to see the thought process of a profitable forex trader. So you on your own, over time after watching our videos, we know how to trade properly. And on that note, because I pride myself a realistic forex trader, one of the honest traders on YouTube, you will not be seeing any hypothetical stuff. No promises, no burst 1 hour strategy, how to flip $5 to $1 million, no overnight success, no fancy intros and all of this stuff. It's just me and the chart. And if that's what you're interested in, I see no reason as to why you shouldn't be part of the family. Whatever you need to do, hit the subscribe button, the bell notification that will keep you in this channel, that will keep you coming back to our videos. Please do it. It'll help you become a profitable forex trader. All right, so let's jump into the chart. Let's see the opportunities that are there for us, and let's see how we can make money for the upcoming week. If you didn't get my name is Best Man, the Kelsey Amaka. I've been trading the forex market for over 10 years. As you can see, this is my live account, and I also manage accounts for other persons as well. Alright, so when I call shit out here, when I call trade out here, both believe I'm equally taking the trade. Alright, so let's start with the dollar index. Let me clean on my chart so we have a naked chart in front of us. Alright, so this is the naked chart of the dollar index. Why am I starting with the dollar index DXY? Dollar index is the average price of all the major currency pair put together. Dollar index is also the Euro USD chart turned upside down. So if you turn the dollar index chart upside down, basically you will get the Euro USD chart. Both charts are inversely the same thing, right? And the dollar index, kind of the other major currency pairs, kind of dependent on the US dollar. So if the dollar index is ranging, every other major currency pair will be struggling or will be in a range. Hence the reason most of you have blown accounts severally this year, because you try to trade, you try to take up, you try to jump in the trade, it's not happening. The market is going up, so it's coming down to your profits, your losses, and your emotions are everywhere. The market tends to act irrational instead of a range. Why so? Because the dollar index has been consolidating. It's easier for traders to make money when the market is trending than when the market is in a range, right? So enough of all of this. Let's see how we can break the spread down. So yeah, I'm gonna mark my key levels out. Yeah, all right, so here we go. Alright, so the dollar index will have this massive collapse and we'll be consolidating for over a year like this. Whenever, let me teach you a little bit of trick. Whenever you see the market just collapse like this, the market will range for a while. I think at the game, when you see the market just collapse like this, the market will go into a consolidation. It will consolidate for a while. Why? So you have to understand the forex market moves in phases, right? So every trending market comes with a period of consolidation, right? After the market has trend for a while, the market would then go into a period of rest. So traders who made money here probably would have lost it here. If you look at previous price action, you will know that I know what I'm talking about. See how we had this massive push to the upside. We consolidated for a while, and we had this massive collapse. We are currently consolidating for a while too. Cool. So it looks like. So those of you who have been training several around this year, and you lost money, it may not actually be your fault, right? You just find yourself trading market conditions that are not favorable to any kind of trader. Forget what they are doing on Instagram, TikTok, and most content creators on Facebook act like they know where all the supply and demand area are. But believe they are only showing you a little bit of the pie. When they incur losses, they don't show you. Like this, when they incur losses, guys, they don't really show you. So if you've been blowing account here, it may not actually be your fault or your strategy, just the market conditions that are not favorable to trader. But the good news is we've broken above the range. So we've broken above the range, and we are currently trading above the range. Now breaking above the range is good. That means we might actually experience a push to the upside. So that means there will be great opportunity on the other major currency pair. So now we're done with the monthly. Let's go to the weekly. On the weekly, I can see a breakout. We are currently hung around this area. So let's get a couple of days. Is it to start buying yet? It's not time to start buying yet because we don't buy the breakout, guys. We want price to break out, then pull back for a retest, so we can start buying all the way to the upside, all right? And so, well, now we're done with the weekly. Let's go to the daily. On the daily, now I can interpret what's going on around this area. On the weekly, I can see a breakout. I can see a red candle. We can't interpret this, guys. This is uninterpretable. So we go to the daily to interpret the happenings around this area. On the daily, I can see a breakout of this range, broken above it, we've pulled back for a retest, and last week candle kind of closed like this bearish pin back. This is what they call a bullish, sorry to say, the bullish pin back. Right, bullish pin back candle is a continuation candlestick. So we've broken above it, we've pulled back for a retest. It looks like a continuation to the upside will likely continue. If I bring up my trend line from swing low to swing high, you realize this is the third touch of the trend line. Principle of price action state the third touch of a trend line does the continuation. Okay, so this is the first touch, this is the second touch, and this is the third touch, and the third touch came in confluence with this support area. So this is a breakout, a retest of a support area, which also came in confluence with the third touch of a trend line. If I bring out my Fibonacci from swing low, from swing low to swing high, this also came rightly into the 50% Fibonacci level. So what am I trying to do? I'm trying to beat the case as to why we should be looking for buying position to the upside. So we have trend line, we have normal support, trend line, we have candlestick, we have Fibonacci, giving us an optimal reason as to why we should be looking for buying position to the upside. So cool. Let me take all this off. Let me take this off. I pride myself a cleaner shot. So if I'm looking at it properly, this is also looking like a double bottom. First bottom and second bottom. You see this properly on the 4 hours. It's first bottom, this is second bottom. So what would be the rules of engagement? Now the rules of engagement for me will be the break of my counter trend line. So once price comes and take my counter trend line like this, if I see a proper 4 hours, a 4 hours break, a 4 hour bullish break of my counter trend line, I will be buying. I think again, if I see a 4 hours bullish break of my counter trend line, I'll be buying. Why not buy here now? I don't buy at support, neither do I sell at resistance. You can buy here now, the market can push up a little bit, hit here, and reverse and smash your stop loss. So to be on the more safer side, wait for price to break above here. Once you see a proper break above here, that means we've respected this area. We'll start pushing all the way to the upside. Now, if we start pushing all the way to the upside, our first target will come from this area. This will be our first target. So one thing is, as a trader, you need to know where the market is heading to, so you can start locking in position. Not just enter a trade blindly without knowing where to exit from the trade. So my overall target is here. All right, my overall target is here, but once price start pushing all the way to the upside, once we come in here, I'm going to lock in 50% of my position. I'm going to take out 50% of my position, push my stop loss past break even, anticipation my other position will get to my overall target, which is, I'm going to explain this properly. So let's assume you trade an $100 account. Pardon me, I'm going to use an $100 account, right? Because the average Nigerian, the average African can barely afford a $1,000 account. So, but if you go with the analogy I'm trying to explain, if you go with the principle I'm trying to put out here, you're going to get it regardless of the account size you trade, right? So let's assume you have an $100 account. You use 0.01. So one price comes in here at the first 0.01. You want to close out your first position entirely as profit. So this way you have taken out something from the market. On your other 0.01, you then push your stop loss. I bought here, right? On my second position, now push my stop loss a little bit above where I bought from. So on the second trade, I have secured, not closed entirely, I have secured a little bit of profit, and especially my second trade will get to my overall target, which is here. So this is how you trade. This is how you keep your trades free. This is how you keep your floating profit trades risk free. Because you can buy here, the market push all the way down, all the way up here, and it will be in a lot of profit, thinking, okay, price will get to your overall target, and what happens? Start reversing all the way to the downside, and price comes and smash your stop loss. Trust me, that's the worst feeling every trader can go through, right? You don't want that to happen. Don't be stingy, don't be greedy. Allow the market, allow your trade, give your trade space to breathe, but more so secure your profit. There's a difference between trade management and risk management. I keep saying this. On a more serious day, I will make a video on trade management and risk management. So again, the rules of engagement is, if I see a 4 hours, a healthy bullish break of my counter trend line, I will be jumping in for a buy position to the upside. But in the scenario, guys, in the scenario you start seeing some redness and price start coming all the way to the downside and we break below here, that means the whole buy setup has been validated. And again, in the scenario price break below here, that means the whole buy setup has been invalidated. And don't worry, guys, we'll realize the market and see how we can jump in for a sell. So if the price break above here, the buy setup has been validated, the market may actually want to reverse all the way to the downside. All right, so that's it with the dollar index. Now let's look at the inverse of the dollar index. So in the dollar index, if we are anticipating a buy, that means for the euros we should be anticipating a sell to the downside. I told the dollar index is the inverse of the euro USD chart. So this is the naked chart of the euro USD. As you can see, the major trend is bearish. It is bearish because it checks all the characteristics of a downtrend. This is a high, this is a low, this is a lower high, this is a lower low, lower high, lower low. Although this is an immediate trend moving against the major trend, but the major trend is still bearish, right? So don't get confused. This is an immediate trend moving against a major trend. That is to say, even in bigger trends will have smaller trends known as pullback or immediate trend, and they can be moving against a major trend. So how do we know, or when do we know when an immediate trend wants to reverse to continue with the major trend? It will always run into key areas of the major trend, i.e. support and resistance or trend line from the major trend. All right, and if I draw my Fibonacci, so if I bring up my trend line from the two recent high, you will realize this is the third touch of the trend line. Just as I explained earlier, how do we know when an immediate trend wants to reverse to continue with the major trend? It always run into major areas of into major technical areas of the major trend, i.e. support area, resistance area, and we've run into a trend line resistance from the major time frame, and we are currently having struggles breaking above this area, and this is the third touch of the trend line. Also, if I zoom in properly, you will see the market has built a case as to why it wants to reverse all the way to the downside. This is the left shoulder, this is the head, this is the right shoulder, and this is the neckline of the head and shoulder pattern. Head and shoulder pattern are bearish reversal sharp pattern. They have the probability of reversing a trend from being bullish to being bearish. So all this is telling us this immediate trend will reverse to continue with the major trend which is bearish. Now this is the neckline of the head and shoulder pattern, or the shoulder line of the head and shoulder pattern, and we are currently having issues breaking all the way to the downside. Now you can see the head and shoulder pattern clearly on the weekly time frame. The left shoulder, the head, the right shoulder, or it can be left, head, right, but in truth this is the left shoulder, this is the head, this is the right shoulder, and this is the neckline of the head and shoulder pattern, and we've broke above below it, so we have a break below it, and we are currently on the round there. The market doesn't know if it wants to push to the upside or if it wants to push to the downside, but because from the monthly and from the weekly we've seen price run into a major area of resistance, we've identified the trend to be bearish. We've seen the immediate trend run into a major area of resistance, and we know that an immediate trend will reverse at a technical area of a major trend. And we've also seen, and this ideology has been confirmed by the reversal of a bearish reversal sharp pattern known as head and shoulder pattern. So I think that again. So we've seen we've seen the immediate trend run into a major area of resistance. We've also seen a reversal sharp pattern known as the head and shoulder pattern. This just tells you that at this point we should be looking for selling position to the downside. We are looking for selling position to the downside. We're not concerned about buying. We are looking for selling position to the downside because this immediate trend has run into a major area of resistance. We have a reversal sharp pattern telling us, okay, this guy wants to reverse to continue with the major trend, which is bearish. Now let's go to the daily. On the daily, you can see the head and shoulder pattern, properly left shoulder, head, right shoulder, and we are currently at the neckline. So this is the breakout. This is the breakout. We've broken above below this trend line, but we've pulled back. We pull back here. Now I want to state something properly, so you guys know how to trade. Most persons who sold had the breakouts. People who sold here think, oh, we've broken out of the range, we're going to bleed all the way to the downside. What happened? Price spiked a little bit to the downside, came back, stop loss became their case. We don't sell at the breakout. Never sell at the breakout, right? Because if you do, you're likely going to be prone to market manipulations and you're going to blow your account, right? Wait for price to break out, pull back for your retest, draw your counter trend line. A break off it, you can start selling or can start buying depending on the trend. All right, so I saw the broker, I wasn't interested. I said wait for you pull back of this area. What happened? We've broken out above, we pull back here, and we are currently having issues with this area. Now on the 4 hours time frame, you can actually see price is currently reacting to this area, right? So the rules of engagement is I've drawn my counter trend line like this. Okay, if I see a 4 hours break of my counter trend line, I'll start selling. If I see a healthy 4 hours break here, or a daily bearish engulfing candle break of my counter trend line, I'll start looking for selling position to the downside. But I feel maybe, just maybe, I don't know, maybe the market might actually speed a little bit. Just maybe, market might actually speed a little bit to this supply area before actually collapsing all the way to the downside. Just maybe. Just actually collapsing all the way to the down. Maybe the market will play around here a little bit, then push it a little bit to the upside, hit this supply area before actually collapsing all the way to the downside. Hey, my work as a trader is not to try to oscillate how the market is trying to move or how the market will move, My work is to identify trading opportunity, then jump with it. All right, so I'll be closing watching this. It's not yet time to start looking for selling position to the downside. Once I see a break of this counter trend line, then I'll consider taking a sell. But if we can play around there and push all the way to the upside, that is also possible. But I'm favoring this market to the downside to the tune of 60%. And if we are indeed coming down, where will be my next target? My next target will be somewhere around 1.10757. Why? So if you look left, you will notice we have interactions with this area before. The market consolidated for several years around this area. So best believe if we are coming down, we will visit this area and we may likely have issues with this area. So when price comes in here, I'll be locking in significant amount of my profit, pushing my stop loss past break even anticipation will get to my overall target, which is here. And if I bring up my trend line from the bottom, guys, follow me, guys. Let's go to the weekly so we get to see this properly. All right, cool. Also have this bad boy, so if we are coming down, we might actually have issues somewhere around this area. So when price start coming down, I'll lock in significant amount of my profit here. The once price comes in here, I'll be very watchful of this area because we can tap in here and push all the way to the upside. So the rules of engagement is we are waiting for a proper break below our counter trend. So if you see a break below our counter trend line, we should be looking for a selling position to the downside. The only time I'll be interested in going long, in buying on the Euro USD. Most of you don't know long means buy, short means sell. Another time I'll be buying the Euro USD is if price can come up and break above here. If I see a proper break above here, then that would be the only time for the euros I'll consider taking a buy. So far as we are trading inside of this range, if price pulls back here inside of this range, I'll not be interested in going long or short. Why? So because we are back inside of the range, and inside of the range the market can act irrational, the market can act mad. So I'm looking for a sell position to the downside, a break below my counter trend line from the 4-hour time frame. I'll be selling all the way to the downside. The only time I'll be consider taking a buy is if price comes above here, break above here, then I'll consider taking a buy. Now that's it for the euros. Let's give the market a couple of weeks or days to decide what it wants to do. Let's look at GBP USD. GBP USD, I'm also anticipating a reversal to the downside. Why? So we had an immediate bullish trend coming to a major area of resistance, giving us an head and shoulder pattern, telling us a reversal to the downside should occur. All the dollar-based pair, guys, all the dollar-based pair are giving us a reversal sharp pattern to the downside. All right, so this is the immediate trend almost coming to violate the major trend, which is bearish. But this trend line, this resistance area has held, it has stood. All right, and you can look, if you look closely, you will see this is the left shoulder, this is the head, this is the right shoulder. At the last episode I said this trend line coming from the bottom might actually cause an upset, and what happened, we came to the neckline somewhere and we rejected, and it looks like we want to push all the way to the upside. If you go to the weekly, you will see properly this was when we came into the neckline or shoulder line of the neckline. Once I saw this style, I said, oh, this guy might actually push all the way to the upside. Did I jump in for a buy? Hell no. Sometimes you see trade, the market that you know it wants to commit, but because the trade doesn't hit your criteria for entry, you just gotta let it go. I'm looking for a selling position to the downside. I'm not concerned in going long or short within here and here. Right, guys, I'm not interested in buying within this area or selling between this area. So far, if you're trading between this high and this low, I'm not interested. All right, the only time I'll be interested in going short is if we break below here. And once we break below here, I'll be looking for selling position to the downside. This area becomes my first target. Why? So I've had interactions here, interactions. So this guy may likely put an offset. So once we break below here, I'm selling, but my overall target will come somewhere around here. This is my overall target. But this area, I will be locking in 50% of my position, pushing my stop loss past break even, anticipation my second position will get to my overall target. So this is the left shoulder, this is the head, this is the right shoulder. Telling us this immediate trend should reverse to continue with the major trend, which is bearish. So let's give this man a couple of days to decide what he wants to do. If he wants to sell, come out and break below here. I will be looking for selling position to the downside. If you want to buy, come above here, break above here, then we will be interested in going long. If I see a break off here, don't worry guys, we'll analyze the market, see how we can go long for the pound sterling. So if you break above here, we'll be going long. If you break below here, we'll be looking for a selling position to the downside. All right, that's it for the pound sterling. Let's look at ADSD. ADSD guys, ADSD has been acting irrational, right? It has been acting mad, guys. All right, cool. Let me break this page down so we understand what we're talking about. All right. Let me clear my shots. Pardon me. So you guys get to understand what we're doing right here. So, okay. If up till now you've not smashed the subscribe button, please do smash the subscribe button, the bell notification, so you don't miss out on juicy knowledge like this. I come out on a weekly basis to analyze the market before the market play out, and I also teach you how to do your top-down analysis, how to trade properly. I see no reason as to why you shouldn't be part of the family, right? All right, cool. To accommodate for more touches, okay, cool. All right, cool. ADSD has violated its bearish trend. All right, so we had triple top, or first top, triple bottom, first bottom, second bottom, third bottom. We started pushing all the way to the upside. Triple bottom are bullish reversal sharp pattern. Not only do we have a triple bottom reversing a major trend from being bearish to now being bullish, we also taken out the immediate bearish trend line from. So this was the immediate trend line. We broke above it, but we are having issues sustaining this move to the upside. Let me zoom properly so you get to see. So this is a breakout, a retest, a continuation to the upside should have occurred, but what happened? We had this immediate candle, immediate bearish candle close back below. Now for me, once I see price breach an area, I don't immediately jump in for the buy. I saw this when I saw price, we had this bullish engulfing candle, and I saw this bearish candle close. Immediately I came and I put a level around there. Now those of you who have been following this channel very religiously, you will know this level has been here for ages, right? For the new traders who are just joining us, I'm going to explain what I'm trying to do right now. So once I see price breach an area, and immediately I see a bearish engulfing candle close, I put some parameters in place to help me stay in the confinement of profitability, right? Immediately I'll put a resistance area, I say a resistance area, a minor resistance area at the bearish engulfing candle. So if this candle was close, if this candle wick was longer than this, it would have been here. But this one is longer than this, so it came right here. What am I trying to do? In my heart, I will say to myself, if indeed this market wants to keep pushing to the upside, if this candle is profit taking and does not signify rejection, and the market wants to continue pushing all the way to the upside, I need the next candle to close above the previous high or wick of the previous candle. And what happened? This candle, despite being massively bullish, closed at the same place like the previous, close at the same place of the wick of the previous candle. So this wasn't a convincing push to the upside to me. And the next, this candle also closed at the same place. And what happened? We had this beautiful candle, bearish engulfing candle close back below here. Now this helped me. Why am I doing this? It helped me stay in the confinement of profit. Now if you look at it from the weekly, this was, you can see all the struggles around this area. Most persons would have jumped, okay, this is a breakout, they would have jumped in for a buy somewhere around there, and what happened, stop loss would have been their case. But I wasn't really convinced this was a proper break. So what am I looking here? I can see this market trying to beat a guess to why it wants to reverse to the downside. This is looking like a left shoulder, and this is looking like a head. Maybe the market will play around here a little bit, just maybe. I'm not trying to oscillate, I'm just speculating. Just maybe the market will play around here a little bit to form a right shoulder before collapsing all the way to the downside. The only time I'll be interested in clicking the sell button for this guy is if price can come here and close below this is horrible. This is horrible. Let me this is horrible. Let me reduce the font. Cool. The only time I'll be interested in clicking sell button is if I see a break, a daily or a weekly bearish engulfing candle break below the previous low. Then it means we've respected this area, we'll start reversing all the way to the downside, because this guy is 50-50. It can push all the way to the upside from here. It can also collapse all the way to the downside, or it can at least push up a little bit, play around here a little bit to form a right shoulder to complement the left shoulder, so the head and shoulder pattern can actually be formed for reversing all the way to the downside. So this guy is 50-50. AUDUSD, I would like to sit on your hands for AUDUSD, because this market can fly above, it can push all the way to the upside, it can also collapse all the way to the downside. So for AUDUSD, I'll be sitting on my hands, allowing the market to decide what it wants to do. Or I'm not interested in clicking the sell button. If you want to form a right shoulder, push all the way to the upside, do what you want to do. When the market is ready, guys, it'll come and tell us. If you want to blow to the upside, come and break above this area. We'll be looking for buying position to the upside. If you want to break to the downside, come and break below this area. We will be looking for selling position to the down. But for now, AUDUSD is a no. Sit on your hands for AUDUSD. Allow the market to decide. And see this, we also have this beautiful trend line. This is the third touch of the trend line. So guys, I'll just give the market a couple of weeks or days to decide what it wants to do. When it's ready, it'll let us know, telling us I am ready. All right, so let's look at the S&P 500. The S&P 500, I was anticipating a reversal to the downside. All right, we had this beautiful we have achieved this beautiful milestone, 75,000 basic points. This is the all-time achievement for the S&P 500. For every milestone achieved, the market tends to close position as profit, so you could see reversal to the downside before the market will start pushing all the way to the upside. I think that again. For every milestone achieved, investors close position as profit, so the market will reverse to the downside. You'll see reversal sharp pattern to the downside before the market then come to the nearest support before pushing all the way to the upside. If you look at previous price action, when we came into $61,000 per coin, we had this beautiful double top. We reversed all the way to the downside. If I scroll back, when we came here, we had a beautiful head and shoulder pattern. We reversed all the way to the downside. So you know what I know what I'm talking about. Yeah, when we came into 68,000 basic point, we had a beautiful triple top. Okay, back to the downside. So this was no brainer. We coming into $75,000, 75,000 basic point, not dollar, 75,000 basic points. We are anticipating a reverse to the downside. This was the left shoulder, this was the head, this was the right shoulder, this was the neckline of the head and shoulder pattern. I say wait for a breakout, a retest of here, we can start selling all the way to the downside, but that didn't happen. We came to the neckline and we had this beautiful bullish candlestick, and we start pushing all the way to the upside. This just explains that sharp patterns, regardless of the time frame they occur, they can't be invalidated. Yes, sharp pattern and time frame they occur, they can't be invalidated. Yes, the higher the time frame, the higher the probability of the sharp pattern playing out, but regardless, they can't be invalidated. At this point, the wholesale setup has been violated. We'll be closely watching this and see where the market wants to enter. So that away from that, BTC Should I talk about BTC right now, guys? All right, so wrap it up with BTC. BTC has run into a major trend line coming from the bottom. So this is the third touch. You can see this is the first touch, second touch, and this is the third touch. And we are currently having issues breaking below this area. So we're playing around this area. All right, we're playing around this area. You can see we have 2 weeks been bullish. The first bullish, last upper week was bullish, this week is bullish, and market is having issues breaking above this area. It's possible if we break above this area, we'll start pushing all the way to the upside, but I've not been interested in going long on BTC yet. The only time I've been interested in going long on BTC is if I see price, let me see. So this is the outer trend line. Okay, I like to draw my trend line twice. Let me draw from the 2 recent high. Cool. Okay, the only time I'll be interested in going long on BTC is if price can come back and break above here. If I say break above here, then I'll be interested in going long on BTC. But for now, this it's possible we can break above this trend line and start pushing all the way to the upside. I'm not disputing, but to be on the more safer side, I need price to at least come and break above here to start looking for buying position to the down for the upside. All right. So if you are any trader or class of trader you're thinking of selling, please be wary of this trend line, because we can. This is the third touch of the trend line. You can pull all the way to the upside. It's possible. You can equally collapse all the way to the downside. So if I the only time I will be interested in going short is if we come back here and we break below here, then I'll be interested in clicking sell that. Then $92,000 per coin will be the next nearest support for BTC. If we break above here, I'll be looking for step position to $92,000 per coin. If we take out this level, we are coming here. But I feel the bears has lost its power. I think the bear has lost its power. BTC may actually rally all the way to the upside, to be honest with you. Alright, so that's it for today's episode, guys. If this video has really been helpful, you enjoyed this episode, please do drop a like button. Just smash the like button and drop on the comment section how you're feeling about this video. I'll catch you guys in my subsequent video. Peace and love.